you have a long background in financial technology, particularly from the financial institution side. So maybe let's get started with the founding of the company.
Yeah, for sure. So founded in 2016. So we will be reaching the dizzy heights of 10 next summer, and a small group of four of us co-founded the organization, and I guess we sort of it's one of those poacher come gamekeeper type narratives. So we were buyers of and users of payment technology inside large banks, and I guess we saw quite quickly how credible public cloud was becoming, the types of user cases that were really being leveraged, and sort of had the idea of seeing whether the world was ready for moving payment processing onto the cloud and onto a platform, and that's really what started the organization back in 2016.
And Barclays was an early investor, I believe. And so was it as simple as going to your colleagues there and saying, hey, we want to start this. You want to back us?
No, it's no, no. So actually, it kind of happened the other way. I think we thought we were out in the wild and doing our own thing, and one of the things we learned quite early was that look, if you want to be serious about doing something as important as payment processing for banks, then they want to know you and they want to be quite close to you. And so what we discovered with Barclays and then subsequently with other big customers was that a really good way to align understanding of what we were doing, their risk folks getting comfortable, they understood a business that was, small and growing and how that worked. One way to do that was to have a much more sort of structural relationship, I guess, an investor relationship with some of our biggest clients. And so, that happened first with Barclays, but since then, Visa, Mastercard, Lloyds, Nationwide have all invested on the back of commercial relationships for us to do work for them.
Mhm. And I guess it was pretty obvious that these financial institutions needed a partner, a tech partner like yourselves.
Well, I mean, we've all worked with banks, and I think there is a lot of technical expertise in banks, but they're also super complicated on the ground. And so I think our recognition, I guess, realization from the customers is they don't really want to be, if they can help it, spending their budget on the slightly less glamorous sort of mandatory work, really. And that was where a lot of the budgets for all of these financial institutions was going and continues to go. So I think really where we got to with most of these organizations was that they would just rather be spending their budget on customer experience, on growing their business, and the stuff that just needs to work. You need to invest a lot of money in, keep current, keep regular, and really build expertise in. So we sort of built a niche around that experience and that expertise, and building a platform that those customers could access, really, so that they could spend their time, money, and effort not on the plumbing, but really on building the customer journeys and agenda that they have.
Uh-huh.
And that's pretty much been the same narrative that we've seen from the really large sort of fintech clients that we have, US banks that have been using us across the UK and Europe over recent years as well. Similar challenges.
Hmm. And tell us about your co-founders. Did you all work together at the same company?
No, no. So two of us had worked in the same company, but slightly different places at the same time. So Michael, who's now our chair, and I both worked at Barclays. We were joined by Steve, our CTO. He came out of high frequency trading platform building in Asia.
Hmm.
Um, and actually, that's really been important for us because, this idea of how do you make a cloud infrastructure like super resilient, super scalable, and really fast. The place where a lot of that has been really stress tested is in, quant and high frequency trading. So he's been great for, how you build the right architecture and the right engineering teams to do that. And then at the time, we were also joined by a chap called Adam Molson, who came out of Swift, and he had a lot of relationships with the larger banks, but also some of the sort of sponsored sort of innovate and fintech companies that were emerging in the UK in 25, 2016, there was an explosion of challenger banks and organizations trying to do something different in fintech, and he was really well plugged into that. So it was a bit of a mishmash of I guess different disciplines, but skills that if you're trying to found a business on your own is it's really difficult. You probably over-index on some things and less on others, and so we were able to sort of balance that out as we were growing.
Mhm. Let's get further into your market. You mentioned that you sell obviously into financial institutions as well as fintechs.
Yeah.
Um, are those basically the two categories, or are there other kind of scenarios that you where your solution is applicable?
Yeah, good question. So I think we also took a decision quite early that if you're going to do something that is tough, then sort of stay focused on it. So our clients, in order to use our technology, because we are effectively plugging large scale regulated businesses into the payment infrastructure of a country, those clients themselves have to be regulated to move money. And so that means they're either banks, credit institutions, or fintechs that have licenses to move value. And so over the years, those that have moved faster have typically been, they were born in the cloud too. They're native in the type of technology. They understand SaaS and platforms. Those guys moved first. The large sort of tier one retail customers, retail banks, for us sort of moved second. And then I guess what we saw is the larger global fintechs and sort of non-UK, non-European banks entering the market sort of adopted third. So we've really sort of ended up with those three groups of clients.
Hmm.
But they all use the same platform. They all use the same product. And we've been really clear that's the best way to kind of honor that promise of it's on us to run it, and that our clients can consume it.
Hmm. And are they purchasing an enterprise subscription plus a consumption kind of portion to the pricing?
Yeah, the commercial model for us has always stayed pretty consistent. And one of the problems with being in a large complex organization running lots of enterprise software on-prem is you don't really know what it costs you. And so your ability to translate all of that technical software, infrastructure, security, plumbing into well, when a customer asks me to make a payment, what does it cost me? That's
Hmm.
really difficult. And so, we set out at the beginning to say, actually, we should not only simplify how a customer consumes our tech, so API first and one and only set of APIs that we don't break. We should simplify the pricing model as well. So customers pay us for the payments that we process for them. And that means that they're able to really transparently know the sort of the drivers of that from their customers at the front end, whichever channel the customers are using, whether it's large institutional or retail. When by the time we get it, those transactions are the same.
Hmm. You mentioned, having some clients non-UK, non-Europe. What portion of your client base is outside of Europe?
Yeah, good. No, good question. So founded in the UK. So we've grown really quickly in the UK. So we have a very significant market share in the UK in real-time payments. Also for more of the ACH and sort of salary-based payments in the UK. We've been growing really quickly in Europe for organizations that are working across Europe. So people like N26, Klarna, some of the US banks that are looking at both UK and European. How do we do that in a joined up way? And we went live in the US 3 weeks ago
Oh,
for
wow.
for our first production customer in the US. So we've been building there for a couple of years, and obviously, we have a big lift to make sure that what we have on the ground is ready for the largest customers in the market. But that's new for us. So we're scaling out fast in the US.
Hmm.
But we benefit from a lot of those clients we're working with in the UK and Europe are either US businesses, or have significant US presence. And so, that's how we're sort of continuing to simplify for those customers.
Hmm. I'm curious because, it sounds like from the surface that things have gone pretty smoothly, but I'm sure that's everything but the case. Like, tell us about like maybe one of the more challenging moments in the company's journey so far.
Yeah. I mean, it when it all goes well, it's great. But you know, I think somebody once said to me, you know, the journey is not a straight line. It looks
Hmm.
like it when you look back, but you know, it is a slightly wavy path, right?
Hmm.
Um, so I mean, I think for us, like many organizations who, you know, grew and scaled, particularly in the sort of 2021 period, you know, it was a, you know, an era of different expectations for investors and different capital landscapes. So, you know, we grew really fast, we invested really quickly. You know, I guess like many organizations, you know, we had to reset the size of the organization. I think for us, actually, that coincided with having done significant lift to build the platform itself, but that's still a really painful you know activity as you're you know making sure the organization is the right size and shape for the future. So that's been tough. That's been a challenge. And I guess we've learned a lot along the way. So, you know, nobody had done this before. And so,
Hmm.
you know, what does it really take to run billions of transactions for large tier one retail banks over a public cloud infrastructure? You know, that just not happened before. And so, you know, we've learned a lot about how to do continuous change. We've had to V2 the entire platform to get us to the point where we operate now across all three large hyperscalers all the time, continuously for all of our flow,
Hmm.
and all the engineering challenges that go with how do you even do that? You know, how do you make that work in a way that customers understand and that you know delivers a promise to them? So it's definitely not been a straight line.
Hmm.
But then that's one of the things that makes starting a business and growing one interesting.
Was product market fit pretty obvious in the beginning? So it was mostly about execution?
I think we had a pretty good grasp of the problem, but I don't think we'd quite worked out when we started what the best way to solve that problem was actually going to be. So I think like many organizations looking in on sort of complex legacy enterprise tech estates in banks, you can look at that for ledgers, you can look at it for compliance programs, risk programs. You know, they're very similar, those challenges.
Hmm.
I think to start with, we had thought maybe the way to do this was to host sort of best of breed legacy tech ourselves. So effectively, just become a hosting option for other people's business, other people's software and IP. Very quickly, we worked out that if you really want to operate as a platform, you've got to be born there and live there. And so we moved from what we thought was going to be a market entry of sort of package together some things and you know build a business out of how they operate together to do you know what actually we've just got to build IP, like we've got to build a business that really works natively and scales natively.
Hmm.
And that was a big decision for us because that's slower, it's a lot more expensive, it's a lot more hard, it's a lot more technically challenging. um, but I don't think we would have the customers we have or the scale that we have if we'd been trying to do that with you know software from 20, 30 years ago.
And that decision to build your own, proprietary platform that pushed out, right, your commercialization, your ability to bring in,
It did.
how long did it take before, you started bringing in dollars from clients?
Yeah, so we were revenue, I would need to check, but probably about 18 months in, maybe 2 years in.
Mm-hmm.
Certainly not longer than that.
Mm-hmm.
And you know, we did that by being really narrow about the products that we took into market to start with. So it was real-time processing, it was in the UK market, it was fintechs that could move fast. You know, it was a very specific sort of set of capability which got us there. And then we've sort of expanded it out from there into markets and the functionality that we offer.
Mm-hmm.
But I think no, you're right. I mean, we probably would have got there a little bit earlier, but one of the things we also found was that if you take you know really big sort of enterprise software and you try and make it fit, into a new technology paradigm, actually that's not fast either.
Hmm.
So, we would have probably spent a similar amount of time, turning stuff off, working out how to make it multi-tenant, working out how to have it effectively scale, even working out how to run it when you really start having customer 2, 3, 4. I think, to be honest, we probably would have found a similar kind of time, probably a similar kind of time.
Hmm.
Um, but I think the way we've tackled it has just meant that we've been able to grow from that point pretty consistently forward.
You've brought in some good investors. Goldman Sachs is one of your backers, and would love to hear about kind of the value they've brought to the organization aside from simple financial capital.
Yeah, so I look again, great question, and I think many founders and organize people running organizations will have different experiences of when is the right time to take what type of capital and from what types of organizations, and it's a tough call, right? For us, we were always really clear that whilst whilst capital was important because we had strategic investment from large customers, actually one of the things that we really wanted to get was, I guess, validation of the financial model, understanding, how did we fit into the landscape? And I think, Goldman's and many of the sort of VC and growth equity organizations give you a really good read that you can't necessarily see yourself because you're very much in an industry, how you're operating across. So bringing in investors with that type of experience was really important. Having them represented on our board was really important. And I think particularly in the case of Goldman's, we have Molten and 83 North as VC investors as well. They've both been great as we've been growing too. Um, I think growth equity is interesting because of the evolution of sort of the operator community.
Hmm.
So, different individuals that sort of aligned to those investors that can provide you with experience and expertise. And we've lent on that in a few places around how we deal with change and transformation. How we deal with sort of the people agenda as well, because as you're scaling, you're not necessarily done those things before, and having those operators to sort of sanity check and bounce ideas off has been really helpful for us.